want to talk to my first-time home buyers out here. People who are looking to get approved for a home for the first time, or people in general. So I want to talk to you guys and give you guys a few gems of what would be the four things that get you denied for a home. So one of the first things is that these credit lenders look at is they looking to see if you have a lot of debt or if you're behind on bills, and mainly the bills that you have to pay on time, that you have to borrow money up front. So like a car note, for example. So these lenders look at to see your risk factor in. So if you're behind on these things, they're gonna look at the potentiality of you being behind on their bill as well, and to see if you can handle it. So, and if you do have a lot of collections, you do want to handle it in some kind of way. I am partnered with a few people who repair credit. So if you're looking to want to work with me, for example, I can get you the help that you need to get those off your credit. They're gonna do their magic or whatever. I don't know how, but they can get that off your credit, help you get your chances and increase your chances to get approved for these loans. Another thing, for example, if you want to get approved for a loan, but another thing that gets you denied is that bankruptcy. People get on the bankruptcy. There are different types of bankruptcies, but you getting on the bankruptcy definitely decreases your chances of getting approved for a loan. People who don't know, people who get on the bankruptcy, for example, you get on the bankruptcy, you put all the bills that you cannot handle, for example, under that order, and you can go months without paying. And these lenders, they want their money. If you try not to pay, they're not gonna be cool with it. So if you mess around and get on a bankruptcy while you're under that, but if they see you under it beforehand, it's gonna get you denied. But they just say, for example, if you are under it, you can go months without paying because you're under that order, and then mess around, they'll clear the case for you. These lenders not trying to play with you. If you're under any type of bankruptcy like that, you definitely gonna get denied. So just avoid that. Make sure the case is closed too. Alright, so here go the third thing that gets you denied for a loan. The third thing that gets you denied for a loan is, let's say you get a pre-approved for a house for about $300,000, and you decide to buy a car, or decide to buy anything that's loan related in some type of similar fashion. That gets you denied too, because just because you're pre-approved, it's solidified. You have to wait until the loan is active, because they're looking at things like your debt to income ratio or anything, or what your credit score is at that time when they pre-approve you. So when the time comes and it's time for you to close on this house, and they see like, they're like, hold on, your debt was, let's say your debt was probably about $20,000, and now you purchased a car, and your debt go from $20,000 to $50,000, and they're like, hold on, your chances of actually fulfilling this loan is maybe lower now, or your credit is lower now. Your income is not up to par for this, so we may have to go back. Maybe now you're not approved for $300,000 now you may be approved for $150,000 now. So you want to avoid accumulating more debt while you are in the pre-approved process, or just in the process in general of buying a house. So don't accumulate any more debt. And the last thing, the fourth thing on my list, is to go back on your debt to income ratio. Like I said, that is very important that you do not increase your debt to income ratio. Don't decide to buy anything big while you in this position, because your risk factor to these lenders are your friend. And when I say your friend, you want to make sure that you're a less risk factor as possible. So if you don't have a lot of debt to income, let's say your income is about $5,000 a month, and after all your bills, you may have about $1,500 left. And for a lender, they may be like, okay, you can handle a certain amount based off your debt and income ratio. But like I said in the last number, is that if you decide to buy a car and they cut your income from $1,500 to like maybe $600 now, you know, just throwing a number out there, you know, now you like, okay, you don't have a good chance of maybe handling this debt, or maybe you don't have a good chance of fulfilling it. And they would actually not approve you because of that. So you want to avoid these things. I say, you know, just do your best you can. Listen to these things. You will have your better chance of being approved. And more likely, I'm here to help. You know, I got the knowledge for it. I got the connections for it. So, you know, just let me know if you want to get some work done. So, hey, just let me know. This is Troy, man.